Money. All right, guys, welcome back. Let me hook up my fancy dancy. My fancy dancy. I got a new mic. I don't know if I put it on right. You guys can see I'm an amateur at this stuff. But we can adjust it as we go. You guys can see my mic here. Last time we had a little problem going on with the audio, so I decided to use my little mic here to be a little fancier. But welcome back to another Sunday Fun Day to the American Dream in Real Estate. I'm your boy Dudley Do Right, and we come to you every Sunday at 8 p.m. trying to inspire you guys. Well, inspire you guys to do more, to go live your life, and just to like really go after your dreams and be yourself. I'm a living testament of doing that, and I want to inspire you guys to do that any way possible, whether it be business or in life. Go out there and do more. Today is December the 27th. So, what are you doing to advance your future and to move yourself forward? Really ask yourself that, right? Are you waiting on somebody else or you keep waiting on somebody else? Go out there and get it. So, today we're going to be talking about some nerdy stuff to my real estate investors out there. So, as you guys know, Dudley Accounting Services, we service small business owners and also our niche. Our niche is real estate investors in the real estate industry. So we've been focusing on this real estate professional tax strategy heavy. You can see my video that I did below. What I did, I'm gonna put a pin in the video to show you guys a little breakdown of actually qualifying as a real estate professional. So just to break it down for you, real estate professionals, this is just a general um, kind of three classifications, if you will, of an investor, right? So you have your operations, right? So some of you guys who are investors, you have your operations going on over here where you do your flips, your rehab, your realtor, you got commission income, W-2 incomes all over here on your operations side. So that's active income, right? But as you guys know, when we get into real estate, we have our rentals, right? We have our side where we have our passive income, which our rentals should all be in an LLC for asset protection, right? So we have our rental side, right? So 9 times out of 10, when we do have our rentals over here, we end up recording a loss on paper because of depreciation and because of all the benefits that we get to take right off in the real estate industry, right? So you have all this rental income, which is non-tax because it's covered by your um, your passive losses that you'll get over here on the books for taking depreciation and things like that, writing big things off, right? So you're going to show a lot of loss over here, right? But the trick is, a lot of investors want to know how can I use most of my rental losses to offset my active income. So there's W-2 income, commission income, flick. I can't say that word. Flips, rehabs, right? So you want this rental income, this rental loss that you carry to be deducted on your taxes, right? For your regular income, right? So you got your passive investor, you got three classifications that you can be in. You got your passive investor, which is your passive investor can only deduct up to his capital losses, right? So if he has $3,000 of capital losses here, he only can deduct up to $3,000 in capital losses, right? This passive investor. So he can only use his passive losses against and net it, offset it against his passive income, right? So that's your passive investor, which is the basic one, right? But then you have your active investor, which can deduct up to $25,000 of their passive losses against his active income, right? So an active investor, all you got to do is be a person picking up the phone, making deals, working on the house, doing stuff within the real estate game, right? So you active investors are people just who have their rental properties and who pick up the phone, who are making deals, who are working actively in the investment business. It's not solely just rental property sitting over here and you're passive investor. 9 times out of 10, we check off the box when we do your taxes for the active investor. So we get to use some of those rental losses against our ordinary income here, right? We can use up to $25,000 of that on top of our standard deduction, which is great. And then we have the best thing of all, the best classification of all, which is a real estate professional. And you could qualify for a real estate professional. There are two major tests, right? You have the material participation test, where you have to materially participate in the real estate trade and industry. And then you have your hour qualification, 750 hours per year. I think that's like 2 hours a day um, to qualify as a real estate professional. Again, like in the last video, we got a little bit in depth about the qualifications of becoming a real estate professional. And when you become a real estate professional, even if you have a spouse, right? So say if you had a spouse who um, you were a real estate professional and you just worked on houses, you worked on flicks, can't say the word right. Well, I can't say the word. Fix and flips all year, right? And then you had your wife who's an attorney and she had all this 1099 income come. You can use all of those rental losses to offset her income on your joint tax return, right? Because you're a real estate professional as the spouse, and then your wife is an attorney, and she brings in that 1099 income, and you can offset 100% of your rental losses against her income. So it's like seen as a group. So the real estate professional, you can see it as a huge benefit, especially for married couples, who have like spouses who are like doctors, lawyers, people who have high salary jobs and they want to save the most money. This is a huge tax strategy for people in that situation. Or if you're just single, who you get to deduct literally everything. If you're these are my realtors, right? My brokers out there. You get to literally deduct everything um, on your taxes when you become a real estate professional. But now you need to, get into holding some properties, right? Um, you want to be an investor to where you have rental properties to hold on to, right? So this is just three classifications that we have, or scenarios, if you will, that we have going into tax season. You're either a passive investor, where you can only offset um, your active income up to, I think it's $3,000 of your passive losses, right? So you can only offset the passive losses up to $3,000 for your active income, which is not much, which is something. But then you have your active investor, people who get on the phone, people you actively, working on your real estate traded business, who get to deduct, not deduct to offset 20 up to $25,000 of their passive losses against their active income. That's W-2 income, commission income, things in your operating bucket. And then real estate professionals get to do it all, baby. Get to deduct everything. So again, get at us. We have 3 days left. We've been doing tax planning for real estate investors and real estate professionals, trying to get them the status and make sure they have their ducks in a row going into the end of the year. Now, again, for you guys who are business owners, who are real estate investors, again, the cutoff is December 31st. So you guys want to get all those big items. If you want to buy a washer and dryer now and you think it's feasible and you don't have to buy it anyway, you want to get that new roof right now, go ahead and get that anyway. So you can push all of those expenses into 2020, and you guys won't be paying hopefully a big tax bill. It will lower your tax liability in the next year. So this has been another tip on how we break down the three classifications of an investor when we're looking at the real estate professional tax strategy. You got your passive investor, you got your active investor, and then you got your creme de la creme real estate professional. So this has been another Sunday Fun Day. Just if you guys want to reach out to our accounting firm at dudleyaccountingservices.com, the link will be in the description, and also leave comments below on anything that you guys would like me to cover. All right, guys, peace, be blessed.